Welcome back to the Bull Brigade. Folks, hope yesterday's dip didn't leave too many bruises after we flagged that SPY support test and Bitcoin's cool down from the moonshot. But today, markets flipped the script hard, charging SPY and QQQ to screaming new highs on pure dip-buying adrenaline.
Yeah, quite a turnaround.
Totally. With FOMC minutes teasing more easing and gold-blasting records, this grind's got legs if shutdown noise doesn't derail us.
Seems that way for now.
You're tuned into the Stock Market Summary Series. Just a quick reminder, none of this is buying or selling advice. We're here for commentary, not financial advice.
Right, just commentary.
Hopefully you guys know that by now, but gotta say it anyway.
Okay, let's get into it. So the strength today was, well, institutional. SPY finished up 0.6%.
Decent move.
And QQQ blasted 1.15% to hit fresh all-time records. Shows serious conviction from those dip buyers.
Definitely. They stepped in hard.
We saw IWM rebound sharply, too, up 1.05%. Maybe small caps aren't totally out of the game yet.
Could be. It's a good sign anyway. Tech, XLK was the biggest leader, though. Surged 1.75%. I guess it's those constant AI tailwinds.
Yeah, that narrative is still very strong.
While Energy XLE, that was really the only notable laggard today.
What's fascinating here, though, is looking at the bond market action. Often gives you a signal, right?
Right. What are you seeing?
TLT, the 20-plus year Treasury ETF. It's sitting perfectly in a textbook bull flag consolidation right now.
Okay.
And this isn't just, a nice shape on a chart. It suggests bond traders might be positioning for lower rates, maybe sooner than everyone thinks.
Ah, interesting. A forward indicator.
Exactly. It's a potentially powerful one.
So if the bond market's already flagging that, a potential break towards lower yields, does that kind of nullify the economic drag from the shutdown noise? Or are we maybe leaning too much on Fed signals?
It's a balance, isn't it? The market seems to be looking past the immediate noise for now.
And speaking of textbook patterns, we mentioned last week the prior bull flag breakout in New Scale Power, SMR. Remember that one?
I do, yeah, from July.
Well, now it's forming a pretty clean, symmetrical triangle, setting those lower highs and higher lows.
Right, tightening up. Classic consolidation pattern.
We're also keeping an eye on HIMS and Big Bear AI, BBAI. Both are kind of coiling in similar higher time frame consolidations, just waiting to see which way they break, really.
Yeah, patience is key with those setups. And if we connect this back to the bigger picture, all this momentum is happening despite the economic backdrop.
Right, the shutdown.
The shutdown blackout is still dragging on day 8 now. But like we said, the market seems to be front-running future rate cuts.
And the FOMC minutes today seem to back that up.
Pretty much reinforce it. A 96% probability now priced in for another 25 basis point trim next week.
Wow, okay.
Seems largely driven by, well, acknowledged downside employment risks and inflation easing back towards that key 2% target.
Got it. So we wait for Friday's Michigan consumer sentiment prelim for maybe more clues.
Yep, that's the next key data point on deck.
Okay. As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way.
Definitely helps.
And click subscribe, too, so you don't miss a beat. You can always unsubscribe later.
All right, so shifting over to the strength story, metals and crypto are really roaring.
Yeah, they are.
Bitcoin rebounded, 1.87% today, recovering pretty quickly after that $12 5K profit-taking plunge we tracked last week.
Right, that cool down we mentioned.
Exactly, and this recovery sort of confirms that underlying strength in the, let's call it the debasement trade, the move toward hard assets when fiat currency value looks like it might be eroding.
Absolutely, and gold, GLD, I mean, wow, pushed past $4,000 for the first time. Up 1.65%.
Incredible move.
Matched by a major surge in silver, too, up 2.7%. Big day for metals.
It really was. And look at gold's chart, that textbook extension right off its recent bull flag, that ascending triangle pattern.
Yeah, clean breakout.
It's such a crucial lesson for traders here. Well, everyone, focuses on limiting risk, which is vital, of course.
Of course.
It is equally vital not to limit your gains. You have to have the strategy, the conviction, to let those winners actually run. Don't cut them short.
That's a hard thing for a lot of people to do psychologically.
It really is. But it's a key trade management strategy. And frankly, it's something we teach in depth in the mentorship program. Setups like today's TLT bull flag, SMR's coil.
Yeah.
Gold's follow-through. That's where the Grok Trade program really arms you with pattern spotting, volume reads, risk tweaks, all backed by personalized one-on-one coaching until you recoup your investment. It's about building that consistent process.
Makes sense. Well, that was certainly a powerful day, folks. Driven by momentum, dip buyers just shrugging off that shutdown noise.
Looks like it for now.
We've got new record highs, clear technical patterns to watch, and the Fed hinting at easier policy ahead. Lots to digest.
Always something happening.
Thanks for tuning in to this Stock Market Summary series. Have a great rest of the day, everyone.
Take care.
And we'll catch you in tomorrow's Market Summary.